what's up everybody? It's Omar. It is November 1st, 2017, 7:50 p.m. in the evening, and I just wanted to talk about the one trade I had today, which was on X. X was on my watch list. If you follow me on Twitter, let me pull up Twitter here. Give me a second, guys. Give me a second. It's just loading here. Okay, yeah, so this was my watch list for today, and you notice X was there. X was there because it had some earnings. I have stocks to trade here, and I didn't, so I just did, like, they have like a week subscription. It's like $1 to stocks to trade. I'm seeing, I used to have it before I canceled it because it was very glitchy. Unfortunately, still a little glitchy. But it does have this Fibonacci retracement indicator that I like. That it's kind of, it kind of automatically sets it for you, which is really cool. I can't open stocks to trade at work, so I'm trying to figure that out. So I may have to cancel it anyway. It was on my. The point is, I saw this news yesterday. It was let's see, because yesterday was the 31st. Yeah, so this is where I saw it. About 6:45 p.m. I saw this U.S. Steel. 8%, up 8% after strong third quarter. That's why it was on my watch list. So I figured it was gonna have a move at the open. So, so basically the market opens now. Just to let you know, I am now trading off a 13-inch laptop at work. That's where I'm. That's my trading station, to tell you that you don't need no big monitors and all this crazy shit to trade. And 1 or 2 plays a day is fine. You shouldn't be making a bunch of trades. Now the day before yesterday, I lost a lot of money. I made a mistake. I thought I shorted when I longed, and I didn't realize after a while stock went against me and I lost a few thousand. So, but good news is I made a couple of thousand today. Actually, quite a few thousand today. So I'm still down, but I made a lot of it back. So the market opens, and here's the sideways action. So pre-market, let me zoom out a little bit. Pre-market, the stock was gapping up after hours. So this was after hours yesterday, and you see it gapped up from 25 all the way to $27. And then, this is considered, and then it was sideways for the rest of the day. And then yesterday morning, this morning pre-market, it starts gapping up, and it gets all the way to a high of about 28.45, and it found its top here, and then it kind of like washed, right? So then the market opens, and you get this like, sideways consolidation sort of, and then the stock kind of gaps up and then tanks. So people that got in, they probably was like, oh great, I'm gonna get in over the over 28.50 here, and break over 28, and sure enough, it broke over 28, and then in the same minute it went from 28.35 to 27.81. So there was a lot of short sellers trying to drive this down. So some people made some money if they held too long and they had stops. They all got burned really quick. So the stock kind of gaps down, and right here is its opening range low, at this point, and then the stock starts gapping up. So it gaps up again. It broke out to a new high here, because the high here was 28.35, and then here the high is 28.40. But it kind of came back down again. Now, what I was looking for was the break over 28.50. So I saw it touch 28.50, and then it kind of formed this flag pattern. You see, it's like gapping down. See how it's gapping up, and then you see this? There's a flag. So usually when you get the flag, you're gonna get a push. This is the 13 EMA right here, and this is VWAP. So I was looking to get in long over the break over 28.50, and I wasn't really paying attention, and the stock in this candle broke 28.50, and I was looking to get in that, which would have broke the pre-market high, and I missed it. And I was doing something at work. I turned right back to the stock, and it was already up to like in the 20, 70, 28s. I was like, shit. I didn't want to chase it, and I wasn't sure if I wanted to trade. I'm still like a little, like, my confidence was a little shooken from yesterday. you know, so I wasn't sure if I was gonna trade, but I was watching the stock. You know, I was watching this flag, and I knew it was gonna have another push, but I just watched. I said, you know what? I'm just gonna watch it. If I see something critical, like something that I feel real comfortable with, I'll make a trade. But I wasn't sure. More than likely, I felt like I wasn't gonna trade, but I was watching X. I just, you know, I went between X and LP something. There was another stock. I forget the name of the stock, but you know, I see it hits higher day here, so it starts gapping down, you know, and you know, it bounces off here. All right, and it starts, you know, consolidating. It starts gapping up again, and then it went up to a high of 29.33. And I thought about trading it over the break over 29. You know, and then this candle broke above it, then broke below it. So a lot of people got stopped, and then, you know, they probably jumped right back in at the break over 29 again, right here, and then they just rode it up. Now, I was gonna break. I don't know. I just didn't feel good about it. So anyway, the stock gaps up to 29.33, and then all of a sudden I start seeing this tech. Now, this is gonna sound crazy to you, but on the 13-inch monitor, it just, like right now I'm in front of a 26-inch monitor at home. It looked so clear. It was just so crystal clear that I saw the weakness, and I was like, holy shit, this thing is gonna tank at least to VWAP is what I thought. I didn't know it was gonna tank as much as it did. So once I saw it, this was the high at this point, right? This is the high of day, right here, 29.33. And then I saw it form this lower high here. And then I saw these next two candles, it tanked. It went from 29.28 to 29.01. And then it broke below 29. So it was at 29.08, then 29.02. And then right here, I saw that it went up, back up to, it opened at 29.895, went to a high of 29.04, but then it closed at 29.02. I said, oh shit, if this doesn't hold 29, this is gonna tank. Because remember, whole numbers are psychological resistance barriers. And what this is showing me, guys, is weakness, right? You see, this was the high of day, lower high, boom, lower high, boom, lower high. Like, so right in this candle, when I saw this, I went in 2,000 shares because I waited. I was like, let's see if this is gonna start consolidating. I said, no, oh shit, it formed another lower high. That's weakness. That is telling you that the stock is gonna give back some of its gains. And right in this candle, I got executed at 28.95 short. I was literally risking here 29, the higher, which was 29.04. So I was risking this. I could have the smartest play would have risked the higher day. But, you know, it's a lot to risk, you know, on 2,000 shares. I didn't want to risk that because that's really the way I should look at it. But I didn't want to risk losing, taking another big loss. So I was just risking the high of this. And I got in here. And sure enough, the stock fucking washed. You know, look, right here, you could have gotten more weakness. It just kept showing weakness. So it was bouncing off VWAP. And I was like thinking about covering. Where now it's down here at 28.64. But I'm like, let me see if it's gonna, if I see it start, you know, gapping up, then I'll cover. Because I was thinking maybe it was gonna get back because the earnings were strong that it was gonna run. Sure enough, it just kept tanking. Once it broke below VWAP, I felt very comfortable staying in the trade. Let me just zoom out. And I just watched this literally wash. So, you know, it just tanked. I thought maybe at 28.50 would maybe, you know, bounce back. Nope, it just kept tanking. You know, it got all the way down here at 27.25, and then right in, I think it was, I can't remember. I think it was right in here. Actually, wait a minute. Yeah, did I get in? I got out. I'm trying to remember where the fuck I got out. I think I wrote it on Twitter. Let me go. I can't remember. I don't know. Lately, I'm having a hard time remembering. Oh, yeah. There it was. It was 27.90 where I got out. So I'm watching this. You know, the stock kept forming all these lower highs. So it was, you know, it was coming down. Now, once it broke here, you know, I couldn't believe it. I got, you know, I was at 29.95 or 28.95, sorry. And, you know, down here, so I'm already up about close to $2,000. And you know, and then right in here, I started seeing it like gap up. So right here, I see this doji. Let me zoom in. So right here in this doji, I saw it. I saw the reversal. So I saw it gapping up, and right in this candle, I just covered, and I covered right in here, and then right in this candle, I went long because my rationale was this. I was thinking at this point. Let me see that it was all right. It found its low. All the short sellers like me are covering, and then it was gonna spike. I had no idea that this stock was gonna keep collapsing, and I quickly dip bought it over the over 28, and I just rode this up, and it got up to as high as 28.16, and this candle, I think it was this guy got to a high of like 28.9. I think it was 28.25, and I sold like when it got it to 28.17. I saw it hit the low. I just got out. And I only took 1,000 shares on that, so that was nice. You know, I made another $170. So you know, I had a nice day. That was it. That was my trade. Now, could I have jumped back in? Yeah, because it kept showing weakness. I mean, look at this. It gets up here, right? Let me zoom. Let me take all these indicators out. Let me take all that out and zoom out just a little bit. You know, all it did was form lower highs all day. Look right here. So this is the gap up. And then another wash. So once you see that wash happening, you just get in the short there. Look, gaps up here, and look, another pop, but it ain't getting back up here. It just keeps showing weakness, you know. And normally, right here where you got this double bottom here, you would have gotten a pop, but the shit just kept collapsing. It just broke below this. So right here was another short entry that you could have taken. You know, and you would have got another. Let's see, this was support, which was, what was this low? This was low was 27.16. So you could have shorted this over 27.16, and the thing went down all the way to 26.62. You know, before, you know, it found its bottom. So I'm pretty sure there was a lot of dip buyers trying to dip buy here that probably got stopped out. You know, in a lot of other areas that just got stopped out. Or they didn't get the big dips. Actually, there was a bounce here. I'm sorry, guys. There was a bounce. It went from 27.20 to 27.50, and then, but it double topped here, and then you could have took it short down, and then, you know, it found its bottom here, and then from here, I think this is where, yeah, it kind of consolidated and go up. Now, I expect tomorrow this to probably gap up some. We'll see. You know, but that was the only trade I had today. You know, I went pretty heavy on the trade. You know, so I made, you know, about $2 grand there on that trade, and then I made another 170. I think altogether, and after commissions, I finished at like 21.20. I think it was something like that. So I had a really good day, but I lost like, I think it was like $4,000. So I'm still down for the week because of that other trade. So, but that's good though. I made some of it back, you know, and it was all because I just wasn't paying attention, and you know, it just happens. It happens. So you win some, you lose some. You know, that was my trade, guys. Just to tell you that you don't need all those indicators. Just look for tops, and then you just short into weakness. You know, like I don't know. Let's see. Let me pull up another chart. What was the other one I was watching today? I didn't trade it, but I was watching it. Let's see, was it? No, it wasn't ALTR. It was, yeah, this one, LBIX. I even put the Fibonacci on this. This was a manual Fibonacci that I did. Basically, the way Fibonacci works is you look for a trend. So this stock opened, you know, the low was here at 147. The high was 252. So what you do is, let me just remove the drawing so you see. So what you do is you go to, and you know, this is not perfect science. I'm still learning this. That's why I use stocks to trade, so I don't have to even think about this shit. But so you go to Fibonacci Retracements, which is this one. Then you gotta look for the low of the day and the high of the day. So you gotta be as accurate as possible. The low here was 147, so 147. I'll fix it anyway. Let's do 146. And then what you gotta do is you gotta track the stock as it goes you know, through its you see how this was the low and this was the high. Now if I'm off, like I'm off a cent, because the actual low, the opening low was oh, it actually was 147. No, it was oh, I had it right. Okay, so what you do is you see a stock gap in one direction. You can do this up or down. So what you're doing is you're seeing the trend, right? This is the trend. So from the low to the high. Now the way the retracement works, and this is how a lot of traders do this, is they don't trade the stock. They wait for an opportunity. Like they just watch the stock and looking for it to hit its high of day, you know. And most traders would have probably entered the retrace. They probably would have put it here because at this point this was the high. But you know, I'm doing this in hindsight. But in theory, this is how it's supposed to work. You capture the low, right? You pull it to the high, and then what you're doing is you're waiting for a retracement. So what happens is if the stock retraces back to the 23 or the 32, that means it's like still gonna run up, right, in its uptrend. But what a lot of people do is they look to see the stock trace back to either 50 percentile or the 61 percentile, and they buy the bounce. So there's traders on Twitter that do just this. They just trade Fibonacci retracements. They don't look at level 2. They don't look at time and sales. They don't care about none of that shit. They just look for stocks that are pulling back either here to the 50%, and they buy it. They dip buy it off the 50%, or look what happens here, the 60%, which is supposed to be the holy grail. So you see, if it's 252 here, it kind of washes all the way back to this 186. According to this, is the 61%. Retracement, which is supposed to be the holy grail. The low here is 188. It like literally touches it and then it bounces. So right here would have been your entry to buy the bounce. And it's pretty accurate. It's not always accurate, but it's pretty deadly. Now what you would do is, so this is a long. So now what you can do is, let's say you're gonna look at a stock like X for tomorrow. You do the same thing but the opposite. So right, so with X, right? Let me remove this. And I'm sorry, you know, watch videos on this and they can tell you this. So here's the high. So now you're doing the opposite because this is the trend, right? The trend was down as opposed to LBIX, right? So now we're gonna start from the top and we're gonna go all the way to the low of the day, which was right about here, right? So what you're doing now is you're gonna look at this tomorrow and see if it breaks above 2330. Then you may go long on it, looking to see if it's going to get to the next resistance point of 23.6769. That's why a lot of people love Fibonacci retracements, because they're really based off support and resistance. And basically the way this works is, as long as the stock, so if the stock gaps up, let's say all the way to the 61 percentile and goes back down, then you short it. All right. If it breaks 61%, that means the trend is over and this Fibonacci is no longer good. That's sort of how it works. I don't know if I explained it right. I'm probably doing it all wrong. You know, leave comments. Let me know if you know this better than I do. You can do this on a yearly time frame too for swing trade. So like, let's say if I go here and I do 1 year. Oops, sorry. Go over here. Let's do 1 year. All right, so I'm going to do 1 year. And let me get rid of that. Remove clear drawing. So we're going to look for the trend, right? So this seems to be the high. So this is sort of in a downward trend. So we want to look for the low, which the low was right here. It says the low is 1855. So I want to make sure. Now, you know, it's a pain in the ass sometimes to try to get it. So let's say all you need to do to fix this is right click on it, go to edit properties, and do the endpoint. The low is at 1845? Or yeah, 1845. Right? I think it was 1845. Let's see. It was 1855, sorry. So I go here, I go to where it says edit properties, I type 1855, right? Hit OK. So on a swing, from a swing trade perspective, when you're looking at this, you can say, hey, if it breaks above the 23 percentile, I'm gonna take it long, you know. And right here, you could have took a swing trade for a long, and you see how it's kind of gapped down. It dipped below it slightly, but you could have took a swing trade on it once it broke above 24.17, looking to swing it, you know, for a swing trade. And look, and then this time, look, it tapped it again, and it got above it, but it couldn't hold the 38 percentile, which was 27.64. It got as high as 29, And right now the stock is 27.30. So technically, where did it close? Yeah, it's 27.30. So technically, it's above the 27. Actually, 27.64 is the next resistance point on the yearly, right? So on the daily. So you know, if it holds above that, then you know, then and the candle breaks above it. So you gotta have a green candle that is above, clearly above 27.64, holding it. Then you know, then you can swing it up to 20, 30, 45. So the premise is that this stock should get as high as 33.26 below before it rejects it and then comes back down. And then you know, then, or if it breaks above it, then you know, then this is the next area that you can trade. But technically the trend the trend is broken from my understanding, the way it works. So a lot of people make swing trades based off this. All right, so I went way over than I was supposed to. Hope this makes sense. You know, watch YouTube videos. That's how I'm learning. All right, good night, guys.